We're taking a closer look at President Trump's 50% tariff on Brazil and what that means for the cost of coffee.
President Trump says he plans to impose a 50% tariff on goods made in Brazil.
The amount of the tariff is so large that it's going to really affect the price of the coffee.
The global coffee industry has always been shaped by shifting economics, evolving trade relationships, and the unpredictable currents of international politics. But few expected the dramatic turn now unfolding across North America, a surprising power shift in the global coffee market where Canada has suddenly surged to the front lines, overtaking the United States in influence, growth velocity, and international market presence. What began as a quiet economic ripple has now grown into a headline-dominating development, leaving analysts asking how Canada pulled off such a rapid rise, and how the United States, long considered a coffee powerhouse, found itself losing ground in an industry it once seemed destined to dominate. To understand this shift, we must revisit the policy storms that have shaped the modern trade landscape. Over the past several years, as tariff battles intensified and geopolitical tensions hardened, the US coffee market faced unexpected pressure points. Analysts had predicted disruptions, yet few foresaw the scale at which import costs, supply chain strain, and business uncertainty would reshape daily operations across the American coffee sector. What started as a series of tariff adjustments during the Trump trade war gradually evolved into a structural challenge for US importers, roasters, and retail chains. For the everyday coffee enthusiast, the consequences were subtle at first: a small price increase here, a limited supply of specialty blends there. But for businesses operating behind the scenes, the pressure was becoming harder to ignore. Meanwhile, while America grappled with mounting costs and shrinking profit margins, Canada took a very different path. Instead of being swept into the turbulence, Canadian companies strengthened partnerships with Latin American and African producers, negotiated new long-term supply deals, and invested heavily in emerging technologies that improved roasting efficiency, transportation, and storage. By embracing stability where others faced volatility, Canada found itself rising almost unintentionally into a position of global advantage. Canadian coffee brands that were once known primarily within domestic borders began expanding across Europe, Asia, and the Middle East, surprising investors and consumers alike with their accelerated global reach. But the rise of Canada in the coffee world cannot be attributed to diplomacy and supply chain decisions alone. Consumer behavior also played a powerful role. As American chains dealt with higher import expenses, many began reducing store hours, limiting menu options, or in some cases, closing less profitable locations entirely. These closures created visible gaps in both urban and rural landscapes, and as availability shrank, competition weakened. In contrast, Canadian companies expanded aggressively, opening new stores not only throughout Canada but also in US border states where demand remained high and supply from local American chains was struggling. These openings were not isolated events but part of a broader strategy that allowed Canadian brands to test US markets at moments when American competitors were retrenching. As a result, consumers across the United States were exposed to a growing number of Canadian coffee options. Some were drawn by novelty, others by pricing, and many simply by accessibility during a period when familiar American brands were scaling back. Media outlets began reporting on the trend, noting that Canadian chains were becoming increasingly common in states like Washington, Michigan, New York, and Minnesota. And as US consumers experimented with new flavors and new brands, Canada's reputation as a coffee producer and distributor began to strengthen in the public consciousness. At the same time, global investors noticed something else: stability. The Canadian coffee market was showing resilience in areas where others showed weakness, and with the global economy becoming increasingly sensitive to political fluctuations, investors gravitated toward industries that projected consistency. Major Canadian roasters, distributors, and retail chains saw a surge in foreign investment, allowing for even faster expansion. This influx of capital accelerated their influence in the global market, effectively pushing Canada ahead in a race that many countries were not even aware had begun. Meanwhile, the United States faced deeper challenges than losing market share. Coffee importers reported higher costs due to tariffs on agricultural goods, transportation fees affected by fuel price spikes, and port backlogs that disrupted delivery timelines. Even small delays caused ripple effects, forcing roasters to adjust schedules and retailers to modify supply plans. Specialty coffee shops, which rely on consistent deliveries of high-quality beans, were among the first to feel the pressure. Some shops reported receiving lower-grade shipments, while others endured week-long delays that hurt sales and customer loyalty. Large American chains, though better equipped to absorb disruptions, were not immune. Quarterly reports from several major companies revealed slowed growth, rising operational expenses, and a drop in year-over-year store openings. In response, some shifted their sourcing strategies, moved roasting operations to new regions, or experimented with alternative blends to reduce reliance on more expensive imports. But even with adaptations, the pace of change in Canada was outstripping that of the United States. As Canada continued to build international partnerships, its coffee exports began climbing. Latin American producers, especially in Colombia, Brazil, and Honduras, increasingly viewed Canada as a valuable long-term partner thanks to trade agreements that minimized uncertainty and encouraged steady collaboration. Even African producers, particularly in Ethiopia, Kenya, and Rwanda, reported rising export volumes to Canada. These relationships were strengthened by Canada's investments in fair trade programs, agricultural development initiatives, and long-term sustainability projects that appealed to producers looking to secure stable futures. On the domestic front, Canada's coffee culture was evolving just as rapidly. Younger consumers showed strong interest in specialty brews, ethically sourced beans, and innovative roasting techniques. Canadian brands responded with tailored offerings that blended craftsmanship with affordability. This positioned them perfectly for international markets, where consumers were increasingly seeking both quality and responsibility. The combination of ethical sourcing, stable supply chains, and strong consumer appeal created a formula that resonated globally. Back in the United States, public reaction to shrinking availability and rising prices was mixed. Some consumers expressed frustration with the reduced presence of beloved American chains, especially in areas where closures left few alternatives. Social media posts highlighted long drive-through lines, menu changes, and inconsistent supply of certain blends. Other consumers embraced the novelty of the expanding Canadian presence, praising new flavors, innovative store designs, and competitive pricing. The shift became a cultural conversation as much as an economic one, raising questions about how a country as large and influential as the United States could fall behind in such a deeply embedded industry. Economists trace much of the shift to timing. While the United States was dealing with internal market pressures, Canada embraced growth. While US companies were navigating tariff-related complexities, Canadian brands were forming new partnerships. And while US consumers were seeing closures, Canadian chains were opening aggressively. Momentum in the coffee world is not easy to build, but once it begins, it can create rapid change. Canada built momentum at the exact moment the United States began losing it. The global industry took notice. Market analytics firms published reports projecting Canada's continued rise and America's near-term stagnation. International buyers began attending Canadian trade expos in larger numbers, while Canadian executives were invited to speak at global conferences that were historically dominated by US industry leaders. What was once a niche sector of Canada's economy had grown into a global point of influence. Competitors in Europe and Asia, too, responded by exploring new partnerships with Canadian companies, further expanding the country's international footprint. Despite this shift, analysts warn that the US coffee market is far from defeated. The United States remains one of the largest coffee-consuming nations in the world, with a massive internal market and rich coffee culture. American companies have the resources, brand recognition, and consumer loyalty to regain lost ground if international conditions stabilize. Many companies are already developing new strategies, including expanded domestic roasting operations, partnerships with US growers experimenting with climate-adapted coffee plants in Hawaii and California, and new automation technologies aimed at reducing operational costs. The long-term trajectory of the US market will depend heavily on policy decisions, global trade conditions, and consumer behavior in the coming years. For now, though, the spotlight remains firmly on Canada. As Canadian brands continue expanding across borders, opening stores in Asia, Europe, and the United States itself, the country's presence in the coffee world shows no signs of slowing. Canadian exporters project further growth as climate-resilient supply chains and stable trade relationships give them a competitive edge in markets still adjusting to economic volatility. This shift raises broader questions about the global food and beverage industry. How many other markets are quietly shifting beneath the surface? How many other long-established leaders might be losing influence while emerging players gain momentum? And how deeply can geopolitical decisions reshape the daily rituals of millions of people? Even something as simple as the morning cup of coffee